you let nobody steal your dreams. Can excel. You can build a business that is unlimited opportunity regardless of your background. Look, we got tall people making it big in Primerica, and thank God they let short people make it in Primerica as well.
Look at this. You make $600 for that one client.
This is bullshit. Most people think Primerica is an insurance company. But when you look at their own data, the numbers tell a completely different story. Primerica's own 2025 data, the average agent earned a whopping $8,199 for an entire year of their life. Meanwhile, these videos, they're still online. Recruiters show them every single day, promising you can change your life, make 6 figures, 110% commission. Boring. Truth in Advertising found convention videos of Primerica distributors teaching others how to recruit using deceptive earnings claims. And when they got caught, they took the video down. Maybe a day after being contacted, but the damage was already done. Because here's what they're not telling you. The company recruits an average of 200,000 people per year and more than 80% dropout. So what's really going on here? The real product isn't insurance. The real product is you. In the next 12 minutes, I'm using their own data to prove it. Not my opinion, their SEC filings, their convention speeches, their own disclosures. So let's go. In this video, we're breaking down what Primerica's own SEC filings reveal about their business model, while the average life licensed agent earned just $8,199 in 2025, and the hidden financial metric called agent lifetime value that explains everything, and the one question that reveals whether any insurance opportunity is legitimate. Now, on paper, Primerica looks completely legitimate. On the New York Stock Exchange, they're traded publicly. Primerica had over 151,000 life insurance licensed independent contractor representatives as of December 2024. They sell actual term life insurance and investment products. Everything seems normal, but there's one massive structural difference. They sold less than one policy for every person they recruited last year. And think about that for a second before not everyone's cut out for this. Traditional insurance companies hire producers, people who can close deals. Primerica seems like they do the opposite. They recruit complete beginners through what's called, this is going to be warm market, your friends, your family, your coworkers, everyone you know. Primerica has a bad rep to work over your warm market, and they just treat them as referrals from you. And if they cannot sell them, they may try to recruit them. And here's the fascinating part. About 80% of Primerica recruits don't actually become insurance agents, often because they end up flunking their state licensing exams. But here's what most people don't realize when they sign up. When you join Primerica, you're not getting paid. You are paying them. And here's the exact cost breakdown from Primerica's own disclosures. I brought my fucking receipts. Representatives typically pay an initial fee of $99 to provide for training and licensing. And then you're looking at $25 per month, $28 in Canada, to access Primerica Online, the company's business support system, plus additional costs that agents report: $150 every 2 years to renew your life license, $175 every year to renew your mutual fund license, $130 every year to renew your E&O or errors and omissions insurance. And those are legitimate. But look, if you're serious about actually getting into insurance, here's what actually matters: your pre-licensing course in the agency you join. Because here's what Primerica, or really nobody, will tell you. About 80% of their recruits don't actually become insurance agents, often because they fail and flunk their state licensing exams. And there's a reason for that. Most companies are going to push you toward 2 very crappy providers. And here's how to know if it sounds like ExamFX or Excel Solutions, because they're so cheap. But those cheap courses also lead to failed exams, and failed exams means you paid all those fees for nothing. The pre-licensing course I'm going to show you, it's new from my buddy Justin, has the highest pass rate I've seen in the industry. Not because it's easy, but because it actually prepares you for what's on the state exam. And here's what is different. When you finish, they're not just going to give you a certificate and wish you good luck and off to the races, get mustard on no. I guarantee you interviews with multiple agencies, real ones from friends of mine that run multiple successful businesses. You're going to be anywhere from 80 to 120% commission contracts, not 25. And you pick the agency that's most likely to help you succeed, not the one that wants you to monetize your warm market. So if you're going to invest in this career, invest in passing the exam the first time and joining an agency that actually gives a shit whether you make money. The link's in the description. Let's do this the right way. Now here's the critical insight. If you're paying a company for the privilege of working there, you're not an employee. You're a customer buying access to a system. And the insurance industry has a devastating secret that most companies prefer I'd shut the hell up about. 90% of new insurance agents fail within their first year. And they try to get all high and mighty that not everyone's cut out for this, but 30% of new agents leave in the first 90 days. More than 90% of new agents quit the business within the first year. And this whole stat, I just want to put this to rest about the 8%. 99% of them are also broke, just not as broke to where they can afford to do it one more month, to play the game one more time. They're just not quite as bad. So the system is designed around one central assumption. You're going to burn through your warm market before you quit. You extract all that LTV up early for. Which brings us to the most important concept in this entire video. Every business has a metric that matters more than anything else. For Primerica, it's something called agent lifetime value. And once you understand it, everything makes sense. Think like a CFO for a second. When a brand new agent joins Primerica, the company immediately captures all of these initial sign-up fees, so continuity, monthly system fees, that are $25-30 a month, licensing and exam fees. You're raising the average order value of your customers, getting them to spend more with you quicker, commission overrides on any policy you sell. But here's the key. They advance a majority of the insurance commission upon the submission of a completed application in the first month's premium payment. As the client makes his or her premium payments, the commission is earned by the independent sales rep, and the commission advance is recovered by the company. Now, what does this mean, Mason? I'm glad you asked. Make sure you subscribe, by the way. This helps a lot. This means they get their money back even if you quit. Now, let's look at the compensation structure from multiple sources. Reps earn 25% commission on life insurance sales. If the average annual premium that a client pays is $1,000 a year, you will earn $250. So recruit 3 persons and go to 35% as a senior rep. Now you're fucking rich. And if you manage to create a senior rep underneath you, your commission goes to 50% and you become a district leader. But here's what people miss. As you promote and get further up in the position in the company, you can increase your commissions from 25% to 70%. You can also make a 10% override on the sales of people who you recruit and train. So why does the recruiting matter more than the selling? Simple math. One policy sale equals $250 in commission at 25%. One recruited agent equals sign-up fees, monthly fees, overrides on everything they sell, plus potential future recruits. And recruiting removes the cap by multiplying producers. Double-digit recruiting for 12 straight months creates the volume needed to uncover the rare go-getters from other people's warm markets. And here's Primerica's own training philosophy. The presentation teaches that attrition is expected and consistency is a solution, aka always go find new people. They know you're going to quit. They just need you to recruit more people before you do. Here's a really clever part of the model. The company recruits an average of 200,000 people per year, and more than 80% fucking drop out. Many do not make much money in the program, and there is quite large quitting rate. Turnover is huge. The odds of success, less than, 5%. So when 80 to 90% of your workforce quits every year, you face a simple business problem. You need constant replacements. Look at what happened to Primerica's sales force in recent years. As of March 31st, 2019, the life insurance licensed sales force totaled 129,821 and was down slightly from December 31st of 2018. The decrease in the size of the sales force reflected the impact of fewer individuals recruited over the last few quarters, which in turn resulted in a lower number of new life insurance licenses. After several years of exceptional growth, momentum in recruiting, licensing, and term life sales began to slow in 2018. In recruiting, when that stuff slows down, the entire business model suffers. That's why they push recruiting more than learning the actual business of selling insurance, which is quite profitable if you do it the way I teach it. Primerica emphasizes all new agents focus on recruiting, fucking stupid, and never truly spends any hands-on training on life insurance, in my opinion. From a pure business perspective, recruiting is 10 times more valuable than selling because many recruits try it briefly and stop. A smaller group becomes licensed and contributes inconsistently. A tiny group becomes go-getters who drive growth and overrides. And Primerica's own internal training materials reveal consistent double-digit recruiting is presented as takeoff speed because 120 recruits in a year creates the pipeline to form a base shop and eventually a hierarchy. Every agent is both a producer and a product. You produce revenue when you are the recruit. You are the product when you get recruited. So does that make Primerica an illegal pyramid scheme? Here's the honest truth that most people won't tell you. Primerica operates legally because they sell real products to real customers, but the economic results tell a brutal and devastating story story. From January 1st to December 31st of 2025, Primerica paid out life insurance licensed Salesforce members an average of $8,199. Representatives typically pay an initial fee of $99 USD to provide the training and licensing, and also may incur some ongoing personal expenses to conduct business, just like any business. But their representatives earn varying levels of income, and the cash flow shown reflects an extraordinary level of success that is not typical of the sales force. $8,199 per year. That's $683 per month. You can finally afford fucking Five Guys. And remember, more than 90% of new agents quit the business within the first year. The rate increases to greater than 95% when extended to 5 years. So the model can work well for the tiny percentage of people who can recruit aggressively, people with massive trusting warm markets they're comfortable selling to, and people who genuinely enjoy recruiting and building organizations. So it does not work well for people expecting to earn a living from insurance sales. And you have to recruit in order to advance. So people who've already burned through their warm market, people looking for high commission splits immediately. Here's what agents actually say about the experience. Corrupt, lots of turnover, agents recruit but don't make any fucking money, multi-level structure, and not much money made in sales. All training must be paid for by the agent. They want to sell to your friends and family, and they don't care when the relationship burns down. So here's the problem. Primerica's business model is built around your warm market, your friends, and your family. But what happens when that runs out? Most agents either buy expensive leads that don't convert, or they give up and they quit. I built a system that lets you turn Facebook connections into paying clients every single day without cold calling, without buying leads, and without pitching insurance at birthday parties. It's called the Rule of 100, and it works with any insurance agency as long as you can copy and paste Facebook DMs. The link's in the description. That way you don't have to be a quitter and you can actually make real money selling. Now, the brutal reality is this. Somewhere between 90 to 95% of agents quit in their first 12 months of receiving their license. Success in insurance comes from sales ability, consistency, and relationship building, not the company logo on your shiny business card. So if you wonder on what my final take is, Primerica is not some illegal scam. They're obviously publicly traded. They sell real insurance. People do build real businesses there, but the economic model is built around agent lifetime value, not agent success. And Primerica paid out life insurance Salesforce members an average of not even $8,200 in 2025. That's the reality behind the recruiting pitch. The company recruits an average of 200,000 people per year, and more than 80% drop out. The system profits whether you succeed or fail. And as long as you pay your fees and work your warm market before you quit. Once you see that, the recruiting culture, the fee structure, selling less than one policy for every person they recruited, it all makes perfect sense. You're not joining an insurance company. You're entering a high churn, talent funnel churn, like chum bucket designed to monetize your aspiration. So if you're serious about insurance sales, you need to see how Primerica's commission structure compares to companies like Family First Life, Experior, Symmetry Financial Group, and true independent agencies. So I break down the actual comp plans, override structures, and contract terms in my next video in case you want to know what's the best agency for you. Click the links down below in the description, get the pre-licensing and the Rule of 100. And when you see a 25% starting commission compared to 80 to 120% at independent agencies, you'll understand why top producers never stay. So watch that next, because the company you choose will determine whether you build wealth or you just pay fees.